Hey everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market update. Today, the net asset of my account is $62,890.21. Today, Apple has closed down 1%, SQQQ closed up 0.91%, SPY closed up 0.07%, and United Natural Gas closed down 6.57%. This week, United Natural Gas has made a rebound from its historical low and then has flushed back to closer to its original position as of today's closing. Today, Dow Jones Industrial Average closed up 0.16%, Nasdaq closed down 0.28%, and S&P 500 closed up 0.03%. Today, the oil and gas and the semiconductor and as well as auto manufacturers all closed down with a loss of more than 1%. Today, the industries generally performed mediocre with ranging losses and gains within the range of 1% and -1%. Since today is Friday, let's try to recap what happened over this week. As of the US stock market, all three major indices posted gains this week. In total, the Dow rose 0.16%, Nasdaq fell 0.28%, and S&P 500 rose 0.03%. Shares of Nvidia briefly traded above $800. The market continued to focus on earnings and the Fed's monetary policy outlook. Nvidia's rally this week and the upbeat guidance served as the catalyst for the US stock gains this week. Nvidia rose more than 8.5% for the week, its seventh straight week of gains. The Fed's monetary policy outlook remains the market's focus. In a speech after closed on Thursday, Fed Governor Christopher Waller stressed that the central bank's position that the policymaker will be cautious when considering the next step in monetary policy. Mr. Waller said, the hot inflation data in January raised the chances of having to delay a rate cut. He said he needed to see inflation figures for at least a few more months, demonstrating his cautious position and hawkish stance that the Fed has overall right now. In the beginning of the year, Goldman Sachs expected Fed to cut interest rates as early as March. However, with the expression and the stance that the Fed officials have been expressing, that they expect the Fed to cut interest rates to only June 4 times this year. In addition, Goldman Sachs expects the Fed to cut interest rates only 4 times this year, in June, July, September, and December. Goldman Sachs economists led by John Jesus pointed to two main changes in the Fed's thinking. First, with the U.S. economic data strengthening, officials are no longer worried about keeping too high interest rate for a long time, and think the biggest risk of a past interest rate is over, so the current rate cut is no longer so urgent. Second, Fed officials want more conclusive evidence that inflation will be close to the target of 2% before the rate cut. The Big Short Steve Eisman's prototype warned that a premature Fed rate cut could trigger a recovery in inflation. He said the Fed's best approach for now is to do nothing, because early rate cuts could trigger a worst-case scenario for a pickup in inflation. He warned that inflation recovery is worse than interest rates remain at high levels over a long term, and he doesn't think the Fed should do anything. The economy is doing good, so why should the Fed intervene the market? He suggests the Fed to wait until June to cut interest rates. looking back at the early stagflation in the 1980s, when the Fed made the mistake of easing monetary policy too early, which led inflation to soar above 14% in 1980, and real interest rate soared to 19% in the following year. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.